It's been a little while since I've made my last video, so I thought I'd give a quick update, starting off with the stock market today. Now, as you can see, we have had a absolutely stellar run up with very little correction since the August low. But one thing that is worth noting on the S&P 500 and the Nasdaq as well, for that matter, is that we are getting lower lows on the BX trender and the stochastic, sorry, not lower lows, lower highs on the BX trender and the stochastic RSI, whilst the price is making higher highs. Now, if we jump over to the THT newsletter, which we can see right here, is historically, if we get 3 divergence points, it is potentially a topping signal. Now we can see here, we have so far only seen 2 divergence points. So if we do put in a very slight correction and take out one of the lows here, that would potentially invalidate it, as well as if we potentially correct back to 6,000 points and retest the market bias, which is what Peter talked about in last week's newsletter. He predicted a sharper correction than the one we currently got. And that's pretty similar to what Jason was talking about. He was predicting a deeper correction in Bitcoin than the one that we actually ended up getting. And along with the cycle analysis that they're doing, I do have a lot of updates for Bitcoin potentially coming up. But for now, I definitely think a minor correction, potentially greater than the one we've already seen, could be coming up in the next few weeks. And we could get, 1 or 2 fake out signals to suck in retail at the tops and make them fumble their bags before the bigger picture trend resumes to the upside. Now, coming over to Nvidia, you can see that straight run up has had even less corrections than the S&P 500 or the Nasdaq. And obviously trends are still up, the BX trender still looks healthy, but one thing worth noting is in the past, when we've seen these absolutely massive runs up with very little corrections, similar to this one here from January 24 to March of 2024, as some people will correct me in the comments, you can see price ran up, put in a weekly correction, but only just by 5%, if that. But after that, it took us from the start of March until pretty much the end of May to break out to new highs. And I think that is something that could potentially happen here. Now, if we look at the correction depth, we got $97 down to $75, so roughly 20%. And a 20% correction from here would be pretty much to exactly $150 and a retest of the previous all-time highs. Now, if we remember Jason in his videos, he says when markets start running straight up without retesting previous highs, they'll usually come back down and retest the previous highs. So I definitely think something like that is on the cards, especially if you go watch Jason's videos. Generally, August, September, October, you usually tend to see a bit more of a drawn-out correction than a one-week correction like we've gotten so far. As well as if you look at Peter's newsletter, he's talking about how it looks like the top is close, but we are going to continue respecting the prices as prices keep going up, there's no reason to sell until you get a signal to sell. Heading over to Microsoft, you can see pretty much the same thing as Nvidia. We've had pretty much a straight run up with 2 very tiny corrections, but we are starting to get some divergences on the BX trender, as well as that massive leg up in earnings didn't look sustainable and got sold straight back off. So if we go back and look at what's happened in the past, you can see pretty similar to Nvidia, when you start to get these straight legs up, like you get here with very little corrections, the market usually tends to go quiet for, 6 weeks to 2 months and ends up correcting, backtesting the previous highs before the trend resumes. So in my opinion, a deeper correction than the 1-week corrections we've seen so far is probably on the cards. Now, heading over to Tesla, you can see that we did get this nice fake out signal on the weekly BX trender, which would have told you to sell out of your positions before last week, getting you to buy back in at higher prices. Now, it does look like we are making a nice compression slash bullish pennant here, but we are still below the 50% level. So until we start seeing, closes and higher lows above $350, as Michael loves to say, closes and higher lows above the 50% level, it's likely that price is just going to chop around in this ever tightening range from $300 to $330. Now, I have had a lot of fun scalping this, just buying a share, selling a share, or buying a bunch of shares and selling a bunch of shares. Because, regardless of what price is doing, if you know what you're doing, you can always make money. Heading over to Alphabet, Google, and Apple, you can see we are pretty much still below all-time highs, but Google is getting pretty close, and we have broken through the smart money zone, which Peter talks about in his courses at Traders Helping Traders. And you can see that zone gave us a headache, so we could very likely see a continued move to either retest the previous all-time high or even break through it before any sort of correction. Ideally, you want to see something like Microsoft or Nvidia, where you just slice through the previous all-time high and you come back and retest it later, because if you stall at it and kind of don't really go anywhere, it's likely the prices will just get sold off again. Apple, same story. If we run a fib retracement, you can see we haven't even made it to the smart money zone yet, but that $240 level is looking like a substantial potential rejection zone. It's not really evident on the volume profile, but just going off Fibonacci's, we can assume that. And heading over to Meta, you can see Meta has done a bit better than Microsoft. It's held more of the breakout, the earnings pump, compared to Microsoft, which sold off a bit more aggressively. But overall, you can clearly see we have experienced quite a bit of headache on the previous all-time high. So who knows what will happen with Meta? Like, in my opinion, it's looking great. It's in all-time highs, but it has had a lot more headache with trying to break back into previous all-time highs than, say, Nvidia or Microsoft. That doesn't mean it can't go parabolic from here. Just in my opinion, once Nvidia and Microsoft backtest their previous all-time highs, I think it's going to be a lot stronger than, tapping its head on the previous all-time highs, correcting, and then just breaking into all-time highs, but not really going anywhere. So Meta is on my watch list. I hope it shows even more signs of strength than it is now. I mean, it's in all-time highs. It's not weak, but it's just Nvidia and Microsoft just look absolutely next level right now. Amazon, you can see we are between a rock and a hard place. The BX trender is showing that buying pressure is coming out of the market. Stochastic RSI is dropping. We have experienced a headache on the institutional sell level. However, we are still holding the 50% level and the the market bias. So overall, it's not in a bad spot, but definitely a bit weaker than the others. Now, Netflix is looking very interesting because the BX trender turned red up here, telling us to get out of our positions at around $1,245 after we had a buy signal at 910 and 970. So it's been a pretty good run up. However, what we can see is we have seen 3 weeks down. So that's not ideal. And obviously, Jason talks about it a lot in his videos. But because I haven't done any backtesting on this 3 weeks down signal, you can see it doesn't really mean much just by eyeballing it, but you'd obviously have to do a proper backtest. Now, what you can see now is we have held the market bias, which has been support this entire bull run pretty much since the bear market low, pretty much. So A theory that I have is Netflix has potentially already had its multi-week correction. Like you can see from the 30th of June up until now, it's been about 5 weeks. So potentially Netflix could actually be the one that leads the next leg up. Obviously, it's probably not as strong as Nvidia or Microsoft right now by the looks of it. But if you were getting into a new position, I would personally get into Netflix rather than Nvidia and Microsoft because they haven't retested the breakout yet, whilst Netflix looks like it's retested this breakout from here, and it looks ready for its next leg up. So only time will tell. Over here at MicroStrategy, if you remember from Jason's videos, he talked about the 3-day down signal printing. And one more thing we can see is we can see a 4th time breakout here, which was talked about in the TIA live stream. So perks of being a premium member over there, but you can kind of just eyeball this. So I don't really feel like I'm sharing too much confidential information. And obviously the 4th time breakout is extensively taught to YouTube audiences as well. So if MicroStrategy holds this market bias in 50% level at 387, which it looks like it is for now, and it manages to come back up to this $460 level, and it goes through it, we could expect to see, potentially an all-time high, or at least a, substantial rally to somewhere in here. Now, you do have this institutional sell zone just above this 4th time breakout level at 476 to 488, whilst the breakout level, depending on when we reach it, would be about roughly 458 to 470. So, in my opinion, I don't think MicroStrategy is a great trade right now, especially with the weekly BX trender making lower lows. But you can see here, you can get these fake out signals, market quickly reverses and puts in a pretty substantial rally, like that's what, nearly 40%. So obviously, with all these stocks that have heaps and heaps of, what can I say, like a meme stock type of cult following, as I think Jason calls them, you can get pretty crazy moves even when the technicals don't suggest. Now, if I remove this Fibonacci retracement and I run this Fibonacci extension off the May top to the May/June lows, you can see the current move has stopped dead on the 50% extension. Now, I think Jason talked about this. I can't remember if it was in one of the member live streams or on YouTube. So you may just be getting some free content here. But if we are stalling at the 50% extension, it makes it less likely to reach the 100% level, which would be a new all-time high. Now, this obviously aligns up with the 3 days down signal that Jason talked about, because a 3-day down signal means a potential cycle top, or at least a significant top coming in. Like I think we had 3 days down here, and you can see the market went dead for many, many months. So who knows what will happen with MicroStrategy? I'm not hinging my bets on it. I remember down here in this triple bottom, I bought a couple of shares and I dumped it as we approached the 50% level from the underside. So I put in a good, nearly 50% swing. But if you know what you're doing, you might want to jump down to the daily 4-hour or even the 1-hour time frame and do some nice scalps here. But for me, especially when you've got options like Netflix, Nvidia, Microsoft, I just don't think it's worth touching MicroStrategy. However, not all crypto stocks are dead. If you have a look at Coinbase, we have had a big sell-off with Bitcoin's correction last week, but we have stopped dead on the 50% level. So Michael will be very happy if he covered it in his videos, which he probably won't since he doesn't do stocks on his YouTube videos. That's exclusively for the premium members. But you can see the weekly BX trender has turned red, which suggests a further sell-off is coming if we do a bit of quick backtesting. However, as we are getting later in the cycle, lagging indicators may lag too much. So if you did buy on the 50% level, congratulations, you are up 3%, and 24-hour trading on some brokers is around 320. So you could be up, 6% since 24-hour trading just opened in the US for Monday, as it's just after midnight there. But another thing you can note is we have held the market bias. And you can see the last time we broke out, retested the market bias, we saw this huge 100% move. So could something like that happen again, like a big move like this? What was this? Over 150%. So potentially, especially as the timing looks like it's almost right for Bitcoin to make its final leg up, if you follow Michael's Elliott wave analysis or Jason's cycle analysis over on YouTube. AMD, classic example of buying in a discounted range. Now, if we have a look from the bear market lows to the current cycle high, if I just delete the other Fibonacci retracement, I should not have done that. That made the chart so messy. Now, I'm going to ignore this wick here because I don't think it is very representative of price action. But you can see, if you had bought on the institutional buy zone, you would have gotten a sniper entry at $81 and you would have doubled your money. You could have taken part profits, approaching a 50% level from the underside, which you can see stalled the market for just 1 week. We broke out, consolidated above it, and we were off to the races. Now, one thing that is worth taking note of is that we are currently approaching the institutional sell level from the underside. Now, you can see we've had a big rejection last week, but we have been bought straight back up. So this just aligns with my theory that, everything's getting bought up so quickly. So the next time institutions sell off, retail's probably not going to have any money left to buy. So everyone's going to panic sell, and who are we going to panic sell into? Probably the hands of institutions who are probably going to buy it up at the 50% level. So I'm personally going to set buy orders just above $140. And I might have a few orders down here at the market bias as well. But I don't expect those to get filled, especially in a strong market. You don't want to see that 50% level get lost too much. Now, a couple of other stocks that I've been scalping but aren't really worth talking about on YouTube. We do have CleanSpark here. Now, if we have a look at my trend lines, you can see I've connected most of the significant tops, and you can see how price has pushed up to this 50% level. So this bear market low to current cycle high, 50% level, and we've rejected very strongly off it, but we have found support on this diagonal trend line. So you can, I took very heavy profits here because you can see the 50% level and a trend line coinciding at the same price has just been massive resistance. So what am I doing for CleanSpark? Well, if we have a look over here, you can have a look at what Peter is doing. And basically, he's pretty much just holding on, hoping that this trend line serves as support. And if Bitcoin, which does look great right now, makes another leg up, we could potentially see another rally into, judging by how this cycle's been going, potentially a lower high and a final exit opportunity, because I don't think crypto stocks, at least the miners, are going to do great for the rest of this cycle, including MicroStrategy. But Coinbase, on the other hand, is looking amazing. Heading over to look at Palantir, another stock that's been on my watch list that I've been talking about with the members in TIA Premium quite a lot. You can see if we run a Fibonacci extension from the August low of 2024 to the February top, projected off the April low this year, Palantir has sliced through the 100% level. Now, using the rules that Jason talks about, you can see if we slice through the 100% level, we will very likely hit the 150% level. Now, obviously, I do think this move is a bit overextended. We can see 1, 2, 3, 4, 5 weeks up. And you know that when, I think this was Michael that talked about it, but I can't remember who. it would have been someone in TIA, Michael or Jason. But when you start to see these massive moves at the end of a trend, yes, it was Michael in his YouTube videos, I remember now. When you see massive moves after the trend's already been up for a while, it usually symbolizes a buying climax and can be a signal of exhaustion. So I do think the 150% level will be hit based on how cleanly we slide through the 100% level. But we probably do need to retest some of these previous tops. And a sell off back to 150 would be, 20 something percent. But that would be a very, very scary moment for the market. Get retail to panic sell before we see a huge, 50% move up into the end of the year and everyone FOMOs back in. And if the FOMO gets hard enough and the AI narrative gets strong enough, maybe we can see the 200% extension get hit up at 275. Over at him and hers, this was another fourth time breakout that we were stalking over in TIA Premium. And Peter DiCarlo over at THT Community actually called this on his YouTube videos, I think around $27 or $30. And it pretty much doubled in the next few weeks. So that was a very easy run up. But after that run up, you can see it has just been absolutely wild swings. Like what we've had, what's this? Like a 60, 70% sell off, like something absolutely crazy. If I can find my short position forecasting tool. And if I can actually use TradingView properly. Yeah, 60% sell-off from the candle body. And from the candle wick, a 67% sell-off. I probably absolutely bungled that. I apologize. You have to watch me not be able to use TradingView properly. There we go, 67% sell-off. So we've had some massive swings here, but what you can see on the weekly chart, we have actually seen a failed fourth time breakout. Now, I think Michael covered this signal on Ethereum. When you get a failed signal, that's a signal in itself, and it does look like we could potentially sell off and retest some lower prices. Now, if we turn on the market bias, we have held support on the bottom trend line of this bullish pennant, or should I say compression, triangle structure, whatever. But what you can see here is we've got 1, 2, 3, 4. So we actually have a potential fourth time breakdown since the fourth time breakout failed to the upside. And obviously the next level to expect support would potentially be $41, the bottom of the market bias, or the 50-week triangular moving average at $36. And if you want to run a Fibonacci retracement tool on this last run up, you can see the $45-ish level, $47 level could all potentially serve as support. So for me, I've had my fun on hims and hers, but I just won't be touching this. But if you want to jump down to a shorter term time frame and scalp these massive, massive ranges, and you know what you're doing, good on you. And as a little bonus, that is quite the capitulation on copper. I remember someone posted this over in TIA Premium when this red candle had just formed. I think it was still in the process of dumping, and I was like, whoa, that's quite a decent move on something that's not a meme coin or an altcoin. I don't trade copper, but I just thought that was interesting to show you guys the crazy volatility at this time of cycle. As Jason always says, things get crazier towards the end. Anyways, thank you all for watching, and I will try to put out a crypto update video later as well.